What about now? Fixed? Oh my gosh, sorry. Sorry. Is it back? Is it fixed? All right. Sorry, guys. Sorry. My bad. Sorry. Sorry, guys. Hey there. Yeah. So what I was saying amid this, right, is I'd say give it some time. You never know, right? I mean, there are folks out there in the saga before who have decided to go radio silence. Um, I was just saying, for a lot of us out there, especially, folks like Richard, folks like, me, whoever else, I know, like, who is it? Biggie, wasn't Biggie like somebody who got Biggie had like a YouTube channel and put out a thesis there. I mean, Roaring Kitty himself, like part of this is, we're just dudes. We just like put out these videos. Like there's no legal team. If somebody says like, if somebody wants to, um, the that if somebody wants to like come and give you a hard time, right? If somebody wants to, kind of bot farm attack or do whatever, come after your reputation, or it's not like, it's not like Nat Turner. I mean, they just did this to Nat Turner, right? Too. He just got mobbed like over on his page recently. But there isn't a legal team. So it can be scary, you know? Um especially yeah. Especially yeah. I'm talking streamers here. Yeah, I mean sure, yeah, of course. Women too, especially women. I'd be way more frightened. I'd be way more frightened if I was a lady streaming. I don't know. I look at people's daughters doing Twitch streaming and stuff out there, and I'm just like, I'm glad I'm just like a random dude who like nobody really cares about. Like it's good. It's good. Like, oh, I saw some statistic. It was like, what was it? Like, it's like 80 million. There are like 80 million. I don't, not important. Anyway, um, but anyway, we do have some things to talk about today. We do have some things to talk about kind of overall with the stock, thinking about the next few weeks going forward. Um, but also, I wanted to something just popped up today that made me really excited, and I decided to just go ahead and explore this rabbit hole because I thought it was going to be awesome to talk about it with you guys. And so I I found a glitch in the matrix today, guys. This is I don't know why this happened. This may be a one time thing. This may never happen again. Um, but for whatever reason, today I figured out I found that at least at two contracts, just at two contracts for the September 5th options chain, I figured out that if you basically manually acted like a high frequency trading algorithm, you could just get free money off of the bid ask spread on the options contracts on GameStop today. So I did that. So let me walk you through this a bit. I'll say what I'll take you over to Thinkorswim, which is my trading platform, and I'll show you what I mean. I mean, I always heard about this stuff, but it never really occurred to me exactly that this could happen to a person. And so I'll show you what I mean. Oh, that was cool. A little cool little close there. So let's let's hop down here. Okay. So let's take a look. So here's where I spent some time today. In fact, you can probably find me. We take this contract. You can probably find me on these trades here. Yeah, probably in here. Yeah, this is me. This is my volume right here. Yeah, this was interesting at the 25. Um, and then this one too. Oh, this wasn't me, but this was me in here for sure. For sure. So, all right. A lot of you looking at this, you're like, all right, Dr. Mojo, like, what are we looking at here? Like, what is this? What are you doing here? Why, what's all the barcoding? I do not understand what's going on. So let me, you might want to check this out. There, at least some of this, I think, maybe the case. I don't know about the whole package of what happened to me today being able to happen to other folks, but what I'll notice this. So this has been actually something that came as a product of stuff that I've noticed progressively over at least the past year of trading. And one of them I would say is I noticed very recently, not recently, but I noticed several months ago that with options contracts, right, I was getting better fills on my orders the tighter that I was, or excuse me, the smaller the size of the orders that I was sending in. So like normally, right, if you go in, you look at an options chain, right? If I'm going to trade something in an options chain, I like to do liquid stuff. I don't like to do stuff that's not highly liquid. I don't like usually to do stuff with a big bid ask spread because right there's inefficiency in there and it takes time for you to be able. You got to wait out being able to exit that contract, right? So a lot of my strategy in general with what I was doing with primarily short options. So you guys know that most of what I do in the options market, I really don't hold long options. That's not what I do. I really don't hold long puts. But even long call stuff, like very infrequently, I mostly go in the money and I'm thinking about that type of contract. We talked about this last week. I'm thinking about that like a managed way to leverage my long exposure to GameStop. And I'm doing that with small portions of my portfolio when I do decide to do it. I think I did it like 3 or 4 times last year. Not a lot, right? Okay. So, but as we've also talked about, a lot of what I do here is short options. So I do sell a lot of covered calls to GameStop's options market maker, which is Wolverine Trading. And very occasionally, I also partake, especially when we're sort of down the road, when we're kind of up into a price action cycle. If I do have some cash that I've extracted from selling lots of waves of cover calls, I will take that and I'll apply that over to short puts because I want to do a bullish bet, but I don't want to allocate the cash, let's say, to shares when they're up at 27 or 29 or 30 or something like that. Yeah. Hey, what's up, Gamma Chad? Hey, have a great trip back to college, man. Best to your son, sir. Yeah. I guess it is that time. It's mid-August. I remember the time well. Yeah. So what I'll do, right, what I noticed is that when I was, I'll kind of decide ahead of time, okay, I want to go ahead and build out my position. Like, for example, today I decided, all right, I think I talked about this. I didn't talk about the trade, but, if you had the chance to watch my video today, I was talking about, basically what the next couple of weeks I think are going to look like, in the sense that I don't think we start to see heavy movement really until we're in that kind of 2-week IV appreciation window leading up to Q2 earnings. And then, we get maybe some dynamism going into earnings, coming out of earnings. We'll see what happens with another offering, something like that. But in the meantime, I was thinking, okay, well, after we got kind of knocked back down today, we did get some interest rate volatility, but then it kind of fizzled out. Not so much thinking we get too much action next week. Looking at the options landscape right now, where our gamma exposure, where the dealer gamma exposure on the call side is concentrated, makes me think we're not really going to have a solid shot, or it's not likely we have too much of a shot moving too far out beyond that 23 position, into that 23 to 25 range until the week of the 29th. So I think we got at least one more full week of kind of sideways trading. And on top, and so anyway, right, because of this, I basically figured like, all right, well, that's some time, right? We could figure out a good contract here. Like, I wouldn't mind, going into maybe about a third of my overall, position, third of my shares, pairing those up with some covered calls. Be great if I could get 18 to 22 cents. Well, that's actually, I didn't think about how much I would want ideally at that point. But, ideally I'm targeting something like 25 is what I want to average. 25 cents essentially like a week is what I want to average. So, but we're kind of in a downtime, low volatility. So I was like, man, if I can get 20 cents, like that's pretty good. I can do that. So I took a look at the September 5 options chain here. And I was like, oh, okay. So I think the spread basically early today was between like 37 and 42. And I was like, all right, if I can get something in the 40s, if I can get 40 or 41 or something like that, like that's great. In 1 week, that's probably going to take like anywhere from an 18 to 22 cent hit if we have the price action going into next week that I think we do. If we get to 23, if we close next week at 23, these things are taking a 20 cent hit. And that would be cool. So I was like, all right, let me look at that. So one thing when I like kind of have that idea, like, okay, I'm going to go, I think this is what I'm going to look at today. I'm going to want to look at this kind of off the open, right? Want to make sure I get some of that exposure, right? Want exposure to this decay in terms of charm. So there's going to be a delta hit based on time loss, so theta loss. So one exposure to that over the weekend. It's usually assessed. It starts to get priced in a little bit going into the close, but then it really starts to come out kind of the first half of the day on Monday. So, so I was looking at this and I was like, okay, one thing that I found out is over the past, year of more than a year now of really looking at this in depth every day is that, if you do single contract orders, my broker is Schwab. So if you do single contract orders, you will be able to get better fills than if you do blocks of 10 or 20 or anything like that. Even if you do blocks of 5, I have had, I think, some success with 2s, but I would say single contract orders are what get the best fills. That is, get the best prices. What I noticed over time is that, usually for a while, I was just kind of putting it directly at the mid. And I was like, okay, if it's a 4 cent kind of or 4 or 5 cent spread, doing it at the mid is fine, because if it's a short call, if it's a covered call, what I got to wait a day and then it's going to be profitable, like fine. That's fine. So, but then I started over time, I was like, okay, well, let me do these let me build out this position with single contract orders. Let me push it to the mid. Let me skew it halfway toward the ask. If I'm selling these at the bid to open it, let me skew these halfway towards the ask. And so something like this, right? If you've got like this $24 call, where you've got 54 cents over here, you got 65 cents over here. This is a pretty big spread, actually. But let's say I was going to do this. I'd be like, okay, so the mid of this would be like 60. Let me try and get a fill at 62, right? And so I'd put in single contract orders, and sure enough, fills at 62. So I was like, okay, today I'm going to go in. And I know I want to do these 25s. 25s are what I like. I don't like to do, right? You can see, that's that position there. It's got the little position light. 24, 23, I know there's call walls there. I could do it. It's just a little bit too much for me in terms of what I'm, I don't know, right? I've said this before, me, I'm a scaredy cat. I like those round numbers. I like that 25. 25 is nice. 25 gets respected an awful lot. 25 gets respected hard. 25 and 30 are levels that the dealers do funky things around to make sure they don't close in the money. 23, 24, those can be big positions. We have seen 23 respected a lot. That's not seen, this summer, that's not something we've seen too much in the past. But they do some extra funky stuff to make sure 25 stays out of the money a lot of the time, or 30. So I was targeting 25, and we had about a 5-cent spread there. And I noticed that when I was doing my contracts, I was like, I just put it at the ask. So I was opening short calls at the ask on a 5-cent spread. And I was like, this is weird. It was just working. But what was strange is I also noticed that the first time and the second time, if I did it like 1, 2, 3 times, it wouldn't go through. But then if I just started kind of like sending orders of single contracts, I was like, okay, click, 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 send, click, 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 send, click, 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 send. Then like the fourth one would fill. And then I'd do that a few more times. And then the fourth one would fill. And then do it and then the fifth one would fill. And then this time the third one would fill. And then it'd be, okay, and then I go wipe my order book and then come back and then do it again. Which, for those of you who may be familiar with how that what that's called, right? We call that usually in the context of high frequency trading. That's the term used is spoofing, right? Where you just keep sending in orders, just hoping that like something like punches through and gets filled somehow. Like you put them in, you delete them, you put them in, you delete them. I mean, there's reasons to do it to mess with the price. Like I wasn't doing it to mess with the price. I was just like, I just want my order to fill. And so then all of a sudden today, for the first time, I was like, this is really weird. These are getting filled at the ask. Can I round trip these? So then I took all of the contracts that I just sold at the ask, and then I started exiting them. I started buying them back at the bid on a 5-cent spread in the same way. And I think today I maybe, I probably clicked 10,000 times, but yeah, I probably ran that like, not a 5-cent spread every time. Sometimes it was a 4-cent, sometimes it was a 3-cent, but and I just started bumping back and forth here between the 24 and the 25. I think I made like 800 trades and probably like canceled like 3,000 like orders that just, that didn't get filled, because they don't get filled, right? It's weird. I don't know why this was happening. Like I send the order in and obviously it's not going to get, like, it doesn't get filled and it'll just sit there. It won't get filled it just sits there. But if I do like 3 or 4 of them, the fourth one will get filled. And so you can just do that, right? And what I realized is that probably what I was doing was what high frequency trading algorithms do, but manually. And I was like, how many times can I do this? And yeah, I think it came out to about like 800. I did this about 800 times today. So if we look at the volume numbers, I was responsible between the 24 and the 25 and the 24 here. I was responsible for about 20% of the volume in these contracts today. So yeah. And I think, fees are assessed. So every round trip, I think costs me 1.3 cents per contract. So on a 3-cent spread, I didn't do anything that was smaller than a 3-cent spread, mostly trying to look for 4s and 5s. The 5s were cool, right? I ended up switching I was doing like hitting 3s for a while on the 25s, but then when it sort of narrowed to the 2s, I was like, and I just started bouncing around. It didn't work. Like it wasn't like consistent with one contract. I'll also say that. Like I was doing the 25s for a while, and then it got too narrow. Then the spread got too small. And then I was like, well, will this work with another contract? And I saw that there was some decent volume also at the 24s today here on this chain. So I was like, well, there's a 6-cent spread on the 24s. Let's try that one. And then it also worked. So I do not know if that will ever happen again. What I will say, and that you guys can take, is, with your brokers, if you have a hard time getting fills, try doing stuff with small, with one, not even just small, try doing it with one contract, and try just like doing it, deleting it, doing it, deleting it, doing it, delete it. Just like try that and see if, you might get a little bit better fill. I would not recommend doing this if you're not super comfortable with doing this. A part of the reason why I was fine experimenting with this today and this worked out is I had a trade in mind that's built into my pre-existing strategy, where it's like, if this didn't work, right? If I went and I like kind of got deep in here, like, 40, 50 contracts deep, let's say, with the 25 or something, I was like, oh, that's fine. Like, if I'm just in this at the ask at whatever, 41 or 42 cents or something like that for an average cost, fine, because I want to hold these for a week. So that's fine. And, then as a contingency after that, oh, if I get blown out, right? If we go nuts over the next couple of weeks and we're at 25, okay, I get a sign at 25. Okay, I get a sign at 25, right? Fine. On a portion of my portfolio at that point, okay. Fine. Right? So that's built into my strategy. So that's part of why how I was experimenting for that. Somebody said something about science here. Yeah. Yeah, man. Like I said, I do not know if this will ever happen again. I will also, I also know this may not work with every broker. So Schwab, I know, specifically has particularly low fees. So it's Schwab is 0.65 cents per leg per share, right? So per options contract. So that comes to it comes to 65 cents per contract, per leg of a contract. So 65 cents to open, 65 cents to close. 65 cents to open, 65 cents to close. So it ends up being $1.30 per round trip. So, I mean, you certainly want to be making at least $2. You want at least a 2-cent spread on that, which is not bad. You can do that. That's going to get pretty tedious, but the 5-cent spread. Yeah, the 5-cent spread was a bit better. Yeah. Yeah. Yeah, I don't know. I don't know. That's why, this has happened before. I think somebody pointed out that Lit Nomad also said something like this. I mean, when he was trading in his prop trading firm, it's very possible this was, I mean, really, it's very possible what I was able to do today was a fluke. Some market maker was just like not paying attention to what was going on. And see, this is the thing too. It's not that it continued to work at every contract. I was doing it at one contract, and then it seems to me like an algorithm or something adjusted. Like it worked at 25 for like an hour, and then it didn't, and then the spread got too tight. It was like between 40 and 41, like I couldn't profit off the spread at that contract. But I noticed the 24 worked, and so then I went to the 24, and the 24 worked for like 2 hours. And then it would get too narrow. It would narrow up to like 3 cents. But then I noticed that the 25s would go back to like a 4 or 5 cent spread. Go back to those. Hit those for a few contracts. The 25 like never really went back to being as profitable as it was earlier in the day. The 25 never really went back. It was a couple. I could do some contracts. I think late in the day there was like a 3 cent spread that I maybe did like 20 or 30 contracts off of, but it was really the 24 then later in the day for basically the whole second half of the day from like 1 o'clock. That was kind of the one I could set up shop at. But even that would narrow up, but I think some of that was in relation to price action. So I wanted to bring this to your attention, guys, because that was really cool that happened. But also like, yeah, for your trades, I mean, not necessarily to do this thing, to have this thing that happened to me today happen to you. This thing could never happen to me again. This is, this was weird. This is a fluke that I just happened to stumble on today. And I was like, you know what? I got the time. Today's the stream. Like, we're gonna do it live. Um, but I think you can still probably use that kind of one contract or small contract thing. Again, watch fees. Another reason why this cannot work too. Oh, another thing. If you have under $25,000 in your account and you try to do that, you will get flagged for pattern day trading. And if you don't have $25,000 in your account, they're going to put a trading hold on your account for 90 days. So if you don't have an account like that, if you don't have an account where that, you meet the minimum threshold there, I know it's dumb. I don't know why it's like that, but it is like that. And they could do that. So don't go try this, especially if you, if you don't have that type of account, or you're not using an account to trade options that's got at least that kind of capital threshold, or if it fluctuates around that threshold, you don't want to get caught with that because that's annoying. Trading hold for 90 days is annoying. Anything else to that? Yeah, again, check your broker for fees. Also, somebody was telling me today that the spreads were not as good on their broker. So this, I think, may have been something that was specific to Schwab. Or maybe there was other brokers that were as good like this, but I don't know. I don't know. It worked today, this one time with Schwab. This is the only time. I don't think I've ever tried this some other time, but But I would say with Schwab doing the single contract thing to get good fills, that I've been doing for a while, and that does work. So give that a go. If you feel like trying to improve, the profitability of your options trades by a little bit, maybe you want to try and find some glitches yourself, just be super careful, because I really lucked out today. Let's see. Yeah, I know. We talked about it a little bit earlier. Yeah. We'll see. Maybe he just needs a break, right? It can be scary out there. Now that I said this, right? Now somebody's going to come after me, watch. As soon as I revealed the scam market. I did this once before, right? When I was talking about the other like glitch that I talked about was I think part of probably what got me banned from Super Stonk is that I said I talked regularly about how wherever the call wall is, there's the probability that in any given week the price on the week will close above the call wall is a far lower probability than the theoretical probability listed via the Black-Scholes-Merton model would otherwise indicate, and that's tradable, and you can make outsized returns on especially short options by trading off of that, which we've talked about a lot here. So I'm pretty sure that's a big reason why I was because it wasn't Super Stonk that booted me. It was Reddit itself. Suspicious. So I don't know. Maybe somebody's going to come after me now because I talked about the bid-ask thing. Ooh. Yeah, I mean, this was my first time really even trying something like that. But no live data either is tough. No live data. Yeah, I mean, that used to be just how it was, right? Until they started introducing. I want to say it's only in like the past 10 years that like live data was something that's just like included with your account or something with the real prime brokers. like Schwab. My previous one was TD Ameritrade, and then TD Ameritrade got acquired by Schwab because Thinkorswim was baller. And then they didn't do anything to Thinkorswim except make some of the graphics blue because they liked it so much. What's the interactive broker's fee per contract per leg of the contract? Do we know? Guido, what is this? What are you talking about, man? Yeah. It was fun. I did have fun. It was funny to me that this it was funny to me that you could do this. This was dumb. This was a dumb way to, I mean, this reminds me a lot of the game Cookie Clicker, which I posted a meme of that somewhere. But you ever played a game Cookie Clicker? Cookie Clicker is a game about clicking cookies. And the object of the game is to accrue more and more cookies. And so eventually you can do things, to like increase the amount of cookies that you can click. Like you can get auto clickers and click while you're asleep and click while you're awake. And you just keep upgrading your cookie clicking capacity. And then until you become like a transcendent, like all powerful, like interdimensional god that can materialize cookies like out of the nether and stuff. And it's the whole thing. But that's what I felt like today. I felt like Thinkorswim transformed into Cookie Clicker, and I was clicking cookies. Katsuki, yeah, that's correct. Actually, the account minimum value only applies if you have margin. That's correct, but you do have to watch out. ProStyle says you have to watch out for good faith violations. So if you're trading in a cash account, you're not restricted to the pattern day trade rule, but you have to wait 2 days after each trade. So like, let's say you trade an options contract, you close it the same day. You've got to wait 2 days before you can open another trade with the money that was involved in that trade. Otherwise, that's a good faith violation because you're trading then on unsettled cash. So they get you either way. What is this? Special trades? If I knew how to gift channel memberships or what that would give anyone, then I would happily gift them. But what do you get? Don't I have to like enable that or something? Like I have to like build a membership thing to give you. Like you just be like a member and I don't know what you get at that point. Do you get like a cool icon next to your name? That'd be fun. Oh man, let's see. Oh yeah. Yeah. He said a quick little goodbye there. Let me see. How do I share this instead? Mm, yep. Give that a little like. Yeah, he'll be around. Watch out for Babe Ruth graphics. Right. That's the. I think he's. I would be surprised if he didn't probably go and do like a. You know, there is a reason why Roaring Kitty, has done and chosen to do the things that he has done. There's a reason that he goes off the grid, so to speak. That he goes, he goes dark like for years at a time. Like there was a time when he was doing streams all the time, right? 2020 was the golden era, and he was on Reddit, and he was on Twitter, and he was doing all this stuff. And then when stuff got too hot, you know, he got his stuff out there, he got the news out there, but then he was too much of a known commodity. He's too much of a known quantity. He was in the sights of people who did not wish the stock well or wish retail investors well, who did not were not pleased with what he was doing. I would not be surprised if Richard was facing a similar situation right now. And yeah, so keep an eye out for Babe Ruth graphics is all I'll say. If I have any idea about what stuff you might see from Richard going forward. Oh man, Interactive Brokers is $1 to $2 per leg. That's tough. Oh, interesting. It's 125 per leg for non-US, and it's 60 cents per leg for US. So if you're US Interactive Brokers, then you might be able to get, yeah, you could try to exploit some of the spreads. But yeah, you wouldn't be able to do, if you're non-US, you wouldn't be able to make a three minimum. In order to see profit, you'd have to do a 3 cent spread. Minimum would be 3 cents, and that gets tough. If you're doing 0.65 per leg like Schwab, or 0.6, if you're doing 0.6, then yeah, then you could profit even off of a 2 cent spread. It's not good, but you can do it. And of course, if you're doing it by going short, something like GameStop, if you're short in calls, as long as you're picking a good strike to do it and you don't mind holding, then you're probably fine. Even if you miss, you get trapped in something, just wait a couple days. It's probably fine. As far as like order flow, I mean, I told you the real thing that was interesting about the options chain. Bids and asks were flipped in terms of what was filling. But yeah, let's take a look. Actually, let's see if any interesting orders came through. As long as we can get this to load. Get this up. Let's give this a refresh. Couple of big deep in the money puts came through. Like actually toward the end and close. Like what was going on here? 125s. This looks more like the short puts, but this is weird. What is this? But this looked like it was like open and closed immediately. And this is tough to tell. No, it's pretty big. Let's see the call side. Oh, somebody sold up. Oh, a huge block of calls. Oh, that's really big. Yeah, somebody sold 5,700 $30 calls for June. That was the only trade at the site. Just 5,800 here, it says. Interesting. Collected a cool 2 million on that. That's not a bad trade, but why do that now? Somebody needed 2 million, I guess. So that was very interesting. Yeah, after having a pretty small day yesterday, options volume and total premium kicked up a bit. Oh, that's right. Good faith violation changed to 1 day. It was 2 days because everything was T+2, but now it's T+1. So thank you, Afro Keys. Cool name, by the way. Yeah, settles next day. Settles next day. Yeah, because now everything's T+1. Oh, we took down the models too. Sheet is still up. Yeah. What is this? What's the question? Just rephrase this for me, Jet Geek. I just want to get some clarity what you're asking here. Can kicking is like the settlement, right? Richard refers to it too. It's the settlement thing. Yeah. So as long as you're engaged in bona fide market making activities, you don't have to follow the normal settlement timeline, right? You can delay. You can fail to deliver, and you can kick the can down the road, and you can do that kind of indefinitely, essentially. But yeah, things go to the obligations warehouse, and then recaps is when obligations get repriced every 2 weeks, usually on Thursdays. Sure. So you can't really check. You can't see net contract gamma exposure on Thinkorswim. It's part of the reason I subscribe to Unusual Whales, is that Unusual Whales lets me visualize that. There are other platforms that'll let you do that. But a good way to kind of approximate it is you look at where you have the highest number of, generally, it's going to be the highest number of, the highest concentration of call OI offset by the number of puts. So that doesn't always work because it also depends how far out of the money you are. Gamma values peak where like at the money. So whatever contract is at the money is going to have the highest gamma value. So for example, we actually have more. We have more calls. We had more calls going into today at 25 than we did at 23, and we had more puts at 23 than we had at 25. So without knowing the gamma, you might say, okay, well, if you're just going off of OI numbers, you might say, well, 25 is the bigger position and there are fewer puts there. That's true. But because IV is what it is, because we're close to the end of the week, and because price is very close to $23, the gamma value at 23 is much, much higher than it is at 25. So the call ends up being there. So you can approximate it if you understand you can estimate those patterns in general. But otherwise, I mean, I posted on my article on Twitter every day for GameStop. I just do GameStop. So you can see it there. I pointed out every day. But if you want to see what it looks like for other stocks or SPY or something like that, then I'd recommend getting a subscription. If you want to do that, I probably have some kind of discount code I can ask for or something like that. So just like GME or something. You can delete it though. Is it deleted? It says, is it fully deleted? No, it's just it's not deleted. He just took down his content, right? Or it's blocked or something like that. He just made it invisible or something. It's probably still there. He probably didn't go and like remove it all. So just, give him some space, give him some time, see what happens. Sure, man. Do we think we can talk about institutional buyers and diffuse the misconceptions about them using shares to strictly lend out shares? Oh, do you mean like? Oh, you mean with like the recent filings? Yeah. So like, yeah. I mean, I don't. I guess how would you assess this? Like, I mean, probably the increase that we've seen in available shares to borrow likely has some of that likely comes from the fact that we have all these institutional buyers having acquired a lot of shares. We take a look. I think at one point, I think we got up to like 10 million, and we've seen 5, 6. We've seen quite a lot. I think, yeah, in part that is because more shares are in institutional hands. But like tens of millions of shares were purchased. We have not seen an increase in the available shares to borrow on the order of tens of millions, like 3 or 4 million, sure, but not like 20, which is what we saw in terms of institutional buying. In fact, did we get any more filings here? Like I'm thinking about like Susquehanna and stuff. Interesting. Morgan Stanley picked up close to 600,000 shares. That's cool. But nothing from Susquehanna, hey? Or Alyeska. Very interesting. Maybe we see some people file late. Or, I don't know, later today, probably. But that's cool. A little 600K. Morgan Stanley. Not bad. But yeah, I mean, if all of these shares were being lent, I don't know. They would have to like the borrow fee. That's the other thing. The borrow fee is so small. The borrow fee is, I don't know why you would do this. Like per year, you're collecting 0.4% on this. As like cash. On the cash value of the share or something like that. Yeah, you're collecting 0.42%. Why would you buy shares just to lend them out and then collect a 0.42% annualized borrow fee? That doesn't make any sense. That doesn't make any sense. Also, in the context of there not being like 30 million new shares to borrow. Also, like, I don't know, why is some of these guys are brokers, but not all of them. Like Renaissance is not lending that stuff. The Canada Pension Plan is not doing that to lend shares. 0.72 Asset Management is not. Goldman, I mean, is Goldman buying 3 million shares of GameStop to lend them out for a 0.42% annualized borrow fee? I don't know. Doesn't seem likely to me. Oh, wow. Power packs are sold out. That's pretty cool. That's a good sign. That's a good sign. Yeah, they're going to need a lot more inventory, actually, to make that thing happen. But that's why I imagine part of the partnership with PSA. Let's get that thing going. Yes, I talked about that a little bit in the video earlier today. So part of the reason that institutional buying is going through dark pool orders, right, is so that, well, actually, what I talked about today, it's not that so the price doesn't go crazy while they're buying. I mean, yes, the institutions that are buying are, yes, okay, they're going to do dark pool orders so that, because you don't want it to make the price. But 3 million shares is not going to make, 3, 5. These are not trades that should, they'll cause the price to appreciate, but they're not going to make it go nuts. I mean, yes, they want to get every edge, I suppose they can. But part of it is because the market maker is selling them these shares and then is settling them later. So part of the issue is all of these are being processed in a dark pool. So whoever's buying this buys it, puts it on a 13F in 45 days. But during that period, during the filing period after the previous quarter's closed, that's going to be the window where then whoever facilitated that trade, who basically is short, effectively in their books, short those shares with unsettled obligations, has essentially something like that 45-day window to go ahead and tie off those loose ends. And so they're going to control that if there's like a huge volume of institutional acquisition like we just saw, right? It actually makes sense why we've seen the price stick basically all the way out till now and stay as flat as it has is likely because, 30, 40 million in volume from institutions, something like that, needed to be settled. And it's advantageous if that's done for the market maker, who in this case is Citadel, I think. Citadel is the equities market maker, to go ahead and settle that over a longer period of time. Sure, I'll show you what it looks like. So you just go to no. Here we go. So here we go. We see gamma exposure. So you go over to Gamma Dex Vex Vanna Chain on the options tab over in here in Unusual Whales. And you scroll down and it's going to give you these handy charts. It's going to give you gamma exposure by strike. So overall, you're going to know where the inter-expirational call wall is going to be. So OPEX is usually going to influence this quite a bit. But you can see here, right? 23. Huge amount of gamma there. 23. Right? It sticks out like that. That's how you know. The options market maker will not let the price close above this mark most of the time. At what was, I forget what the theoretical probability was, but when the price opened at 22.9 or whatever today, the theoretical probability that the 23 was going to close in the money was very high. It was like in the 50s. It was like close to a 60% chance just using the Black-Scholes-Merton model. Black-Scholes-Merton model is telling you, gosh, the price is 22 this and this and all the dimensions and that. 60% chance, 55% chance that's closing in the money, the 23. But if you look at this, how many people could say, oh, Max Payne or, Max Payne's at 22.5, call walls at 23. No, there's a very small percent chance. It's not 55. There's not a 55% chance, right? Because last week was the same thing. Week before, same thing. Week before, same thing. Week before, same thing. Didn't close above 23. So what that's going to do is that's actually going to go ahead and make options contracts mispriced. So the price on those contracts are going to be too high because they're being based on a 55% in the money probability when it should be like 2%. But they don't factor in dealer positioning into their pricing model. But if you do, you have an edge. And then you can exploit the inefficiencies in the contract pricing. So yeah. If you take a look here, for example, let me make this a little bigger for you guys. How do I get myself out of the way? There we go. You can view it on a week-to-week basis. So you can see going into today, that's a lot of call gamma at 23. Going into the next week, still call wall at 23, and this is going to shrink. The more time we hang out down here, the more this is going to shrink, and the more that's going to go into the week. Watch, as soon as we start the week, this stuff is going to go down. Right. 29, we actually do have 25. We have more calls at 23, but more net GEX right now at 25. So we do have a chance this week based on this setup, depending if we move up into this range toward the beginning of the week, then we have a chance of hanging out in the 23 to 25 range. We might start to see that toward the end of the week on the 29th due to the IV appreciation effect approaching earnings. 9.5 starts to shift a little bit more towards 25. 9.12 more. I mean, we don't have a lot of contracts there. 9.19, 25, right? So we can go out to October 17. And this October, right, starts to look a lot more like what we saw kind of earlier in the summer. So as we start to go farther out, options positioning starts to account for bullish divergence. But basically on the weeklies, 29, we just kind of barely have it, but the 23 position is still really big. It's not really until we get the lead up to earnings that this starts to kind of skew more towards anticipating 25 as our call wall. But going into September OPEX, it's pretty solidly 25. We do not have a very large accumulation of calls, short or long, at $23. And in fact, it is a put skewed position, which we have not seen in quite some time. So that's what that looks like. I mean, I think GameStop is. I think it's getting close to the victory lap. For a while, I think. It's for some of the same reasons I said I keep coming back to Roaring Kitty. Roaring Kitty said what Roaring Kitty needed to say. If you go back and you watch all his stuff, I mean, look, there's a lot of stuff that he alludes to. There's a lot of stuff that he doesn't come plainly out about that, I needed to figure out. I'm sure, it's why Richard built his channel, stuff like that. There's stuff obviously he knew about. But he said what he needed to say. I think, Richard's been at this, 3 years? I don't know about this Uncle Bruce guy, but, maybe he's just said what he needed to say. How much more? How much more, right? How many more times do you need to say the same thing and have, let's say people come in the comments or say, try to figure out something about you or give you a hard time or something like that. It may not be that they don't want to be live so much as GameStop looks like a good play now. It has, for those of us who have been watching very closely, it has for a while, but the current cost may offset the benefits for some of these folks. Oh boy, that's a lot of fails. Very interesting. Oh, interesting. So Susquehanna did file. They did file, but just calls and puts, huh? They didn't change their share position. Yeah, they got like 800,000 shares, I think. So 600,000, close to 700K. Yeah, that's very good. That's a very good sign. Yep. That's right. 88%. 88%. Call wall on SPY, 0 DT is respected 88% of the time. Yep. In fact, all the things I say about options are way more regular and predictable and useful, like trading the indexes. In fact, that's why like it behaves so well. Like options metrics behave so well with respect to SP 500 trading SPY that's what like Spock Gamma like did a lot. They have their whole equity hub. Like you can do equities. They would do stuff with equities for a while, and then they're just like SPY, like SPY. SPY's too regular. It's too regular. It's too trader favorable. That being said, I'm not saying go and trade SPY. I do not trade it. My choice is GameStop, right? That is where I have set up shop. That is my hunting ground. That is my that is my investment. You want to make sure you're sticking to what you know, and know well through experience and long time observation. If you go into trying to trade SPY, like it's GameStop, it does not. It behaves very differently. The relationship between volatility and price action is inverse. You have to be prepared to deal with the fact that like that dimension is inverted for SPY, which in and of itself alone is very different. I think the market for GameStop, in terms of price action, I think we're probably in for a pretty good EPS beat. And I think a lot of that is going to be carried by increased revenue from the core business. That being said, I think what will happen coming out of earnings will be signaled, maybe based on our price action going into it. So next week, I think I've said this before. I think we're going to still look flat next week. Following next week, I think we're looking at maybe we start to see some rumble. We start to see some movement in the 23-ish area. Maybe we start to do 23, 24 going into September. Maybe we get up to like 24 and a half again pre-earnings. If we see something like that, I think they're setting up to then take us to kind of gap up with an EPS beat, a sizable EPS beat on September 10th, maybe up to 27, 28, basically around the gamma max for those the inflection point for the second round of bonds. And then I don't know. I think maybe we get another offering. That would be cool. Maybe look like March again. I mean, that would be fantastic, right? Because you know exactly how this works. What a godsend, right? What a godsend to have that work exactly the same way, to have that play out exactly the same way the second time around. So can do that again, eh? Okay. No. I won't cancel them. No. If something happens, I'll let you guys know. I'll be straight about it, but I will distribute the information somewhere, but yeah, but no, these are not going away. These are not going away. Do we reduce those by 100? So do they have 38,000 calls and 41,000 puts? Wouldn't be surprised if they bought the senior notes, the convertible bonds. Let's take a look at that. There they are. Yeah. Yeah. So they have exposure on the put side to 4.1 million shares, and they have exposure on the call side to 3.8. But we don't know. This is the problem: is we don't know the holding orientation. Oh, Goldman also has close to 30,000 puts. LMR 27,000 puts. Oh, that's earlier. Yeah. So these could be, I mean, Goldman could have puts to protect their position, so they could just have this hedged. These could all be long puts. But Susquehanna, long on both legs? I don't know. They could have short puts and cover calls on top of them. They could be short both legs. Don't know. Yeah, I mean, I don't know about Roaring Kitty buying power packs. I don't know if he collects Pokemon cards. But it probably will bring in millions of revenue. Yeah, if there's demand, absolutely. If there's demand, they're going to do another one. This is right. I mean, this is what Ryan Cohen intimated back during the interviews post second offering. You know, they did these interviews, CNBC, Fox Business, and they asked him, they're like, so what's up with the offerings? Like, did you do this? Like, you trying to target something? Is this merger acquisition? What's going on? And he's like, look, if somebody's going to give you a 7-year, if somebody's going to give you $4 billion in 5 to 7 years, zero interest loans, almost $5 billion, just hand it to you, no interest for 7 years. Are you not gonna take that money? All you gotta do is go put it in treasuries and you'll make hundreds of millions a year that become yours, you know? So as long as he can keep doing that, why not keep doing that? That's right. Actually, Shinsatsu makes a good point here. They could pivot from doing convertible bonds to doing ATM or senior notes. Different way to do an equity raise. And yeah, right. So you'll notice that the amount of the bond value right now is equivalent to the amount of cash on hand. So the loans are, I mean, they're not secured, but in a way they're secured in the sense that if the company goes bankrupt, the convertible notes, the convertible bonds, there is cash to cover that. So there's no loss for the convertible bondholders. Something like that. That's not the way that it's officially structured, but that's like how it looks on paper. So essentially they have 2x leverage on their own cash. Yeah, 2x leverage on their own cash. I mean, are they going to let them do 3x leverage on their own cash? Maybe. Who knows? Because it's also not exact. Like, it is a loan, but it's not. So Yeah. So yeah, I mean, I think we probably, like I said, let me hop over here. You know, we probably got one more week, probably out to like. Make this big. One more week, I think. Probably going sideways right into right 22nd here. One more week. Two, I think. Right, another thing to keep our eye on here is Roaring Kitty PMO. Look at how tight this thing's getting. Getting very close, and it does look like, give her another couple weeks. Right in here, right. So this is going to be week of the 29th, Monday the 25th. Right. I think between the 25th and the 29th, we're going to get that PMO cross on the daily. And then I think we start to chug back towards zero line, and we get a little check maybe at the zero line, and we see if we pop right back above that. So the last time we did that was this. We were actually pretty far there. We were a lot farther away when we had our upcycle go into the first offering. We were a lot farther away. And we didn't get the PMO cross until April 7th. So we're a lot closer. And then the previous time was National Cat Day. National Cat Day was our cross. So the big up that Monday and then National Cat Day. That's when we got the next cross. So, I mean, if these are good signals for upcycle markers, we're getting close. But another week and a half, I think, before we really start to see that. Maybe 2 weeks. Are they putting earnings? Yeah, it's not. They're putting it here on the 3rd. It's not the 3rd. It's going to be Tuesday the 9th. It's going to be Tuesday the 9th. Yeah. Yeah, that's very interesting. It might be a Friday thing. It's also a lot easier to do when like the anchor points don't move that much. If you're really moving a lot during the day, it's hard to do that, because then if you're scalping, you want to figure out what's going on with the chart. I was able to do this today really without needing to look at the chart because we didn't do anything. So keep that in mind too before you go try out something like that. But my guy, there are things you can do about this. Like you can sell, like, you know what this looks like, right? You can study the pattern of an offering. You can sell covered calls. You can sell covered calls into the offering. You could flip your position again, right? You can then sell covered calls on that position and lower your cost average, right? I think, after all, if you do like a full kind of cost adjustment on all of the covered calls I've sold over the past 14, 15 months, my average cost, I think, I bought in a lot of different places. I didn't buy at the lowest point. I didn't know what was going on with that volatility last summer. So I had like, I was like buying in the 27s or 26, and I bought again 23s and the 24s, 25s again, and then back down. And then so I was all over the place. I was having like $26, $27 average costs on some of this stuff. But I think my like derivative adjusted per share cost basis now is like $18, slightly below $18 now. So you can do that, right? Like a bond offering allows you to get that cost basis even lower. The more time there is, the more opportunity you have to lower that cost basis, and to take value out of your position. Okay, $29.95 is not optimal, but you can make it better. You can make it better. Yeah, Guido makes a good point. The cat ears thing will probably have to. I mean, double tops do happen intraday. We do see that kind of that thing, but it's been a little ways since we've seen those things pop up as clearly, right? I don't think we've seen a big one of those since like January, because the last two kind of cycles where we may have had an opportunity for it, we had this, we had offering related things kind of disrupt how that would look. So we didn't end up with the double top. Here we got one because we didn't have an offering. We got one here too, actually. Even with the offering announcement. So it'll come. Right? Part of this whole process is figuring out new ways to develop strategies, new ways to figure out new tools, how to approach different situations, how to be ready to do what is required in a particular situation. Because if it depends on what you want to get out of the play. I try to learn all this stuff because I'm not terribly patient, right? You could say not terribly patient. I am patient to a certain degree, but okay, I have short and sort of medium term return goals on my investment. So I say, okay, well, I am willing to sacrifice a portion of the total ultimate possible long-term value of this investment so that I can meet a medium-term goal, so that I can meet a short-term goal. Now, not the entirety of the long-term goal for the sake of the medium or the short, not the entirety of the medium for the sake of the long or the short, and not the entirety of the short for the medium or the long-term goal. But being able to understand, say, different trade orientations, different ways of structuring the portfolio, different instruments that you can bring to bear on the situation allows you to meet those different goals so that so that you don't necessarily feel like you're in that situation of no matter what happens, I'm always waiting, right? Which, okay, that's, say, preserving your long-term prospect there. But that can also ultimately diminish what your returns will be possibly in the future. If you miss too many shorter or medium-term opportunities for building your portfolio, yeah. Hey man, you're not stupid. This is a hard game, and it's not fair. And there are lots of people who want all of us to fail and will cackle to themselves with delight at the thought that people out there are losing while they're winning. There are people out there like that. So, I would not chalk up your frustrations to stupidity so much as inexperience and stupidity are different things. part of what I hope to be able to do, and a reason why I started these live streams too in the first place was like, you know, I realized like, okay, like I didn't think that much of some of the stuff I was posting on Reddit until some of those people I think came in and shut down my account, and I realized maybe just how helpful it can be to just talk about some of this stuff or point out these little things that I find or these little things I see, like this ridiculous thing that happened to me today. Uh, like um, to kind of give you the idea or to just present something other than what the system presents outward, right? To be able to do something like that. So it's like that not just in this context, but in so many other contexts, and it's very difficult to discover things ex nihilo, right? Most people can't do that. Most people don't do that. Human beings, right? Part of our advantage is that we are a cultural species, in that we are able to store up knowledge and communicate that to one another, to communicate values and perspectives across vast, vast spans of time. And so, by being a cultural species, a prerequisite of that is being a social species, and we rely on each other in order to take the next step forward. That's So I would definitely don't think that if you're not having you know the tip top success that maybe you want to be having right now, that's an indication of your stupidity. I think far from it. The fact that I think you're here and you're out there and you're searching for stuff and you're willing to learn, like, I think speaks to the contrary. So um, just make sure not to get too hard on yourself, man. Yeah, yeah. Rob's learning. Hey, I myself I didn't do that. Like I did this type of stuff with mixed success for like 3 years before I got it like locked in. And a lot of that also required me to like have a like figure out a vision for my life and have the right things to aim at and figure out the right way to balance this stuff. And I only figured out how to do this as well because I was like, all right, I am going to write every day about this one stock. And I kind of figured out, I think I mentioned this to you guys in a previous stream. Like I figured out how to, use a short option strategy to kind of build a position earlier, and I tried it with some other stuff. But the danger is if you don't have a strong concept for why the bottom of a stock would not fall out, then there is significant risk to using the type of strategies that I use and advocate here. Um, but when I realized what GameStop was doing, I realized that GameStop was in fact a perfect, like as far as I was concerned, a perfect scenario to deploy this stuff, to deploy these types of strategies, and how it works, and being able to use this to build a position and understanding that, okay, once things go up and they go up, okay, great, we're going to go to 30, we're going to go to 35. But if we do this, the company is going to find a way to raise the floor, but also bring us back so that we can make money on the way up. We can take profits on volatility on the way down. And then boom, right there we are. The company just brought us right back to an attractive purchase price relative to the fundamentals. But anybody who maybe missed or mistimed it or something like that, now the floor is higher. So this time down, it's still higher than we were versus the previous low. Like that's such a nice thing for the company to do. It was years I was searching for something that this strategy would work with. Yeah, and here it is, and it's been quite the past 15 months. I'll say that. Yeah, I mean, but you have to be, what I would say to that is you have to also be reasonable. And part of what some movements in GameStop are trying to do, but some GameStop, like not even just GameStop, like this is Wall Street, like I think sows these seeds. Bad actors sow this kind of mentality um, into investments to get people to basically put their money in the system and never take it out. And with GameStop, if you are long the stock, but not, let's say, short volatility, or willing to part like at a certain price, some portion of your position at a certain price at some point in time, like again, like that you're free to do that. But what you're also saying is you're saying that I would rather have I would rather hold and keep the right to infinite return for an infinite amount of time than I would like finite return for a finite in a finite defined amount of time. And what happens is people don't understand the trade that they're actually making every day, right? Because you make a trade every day, every second of every day that remains true, you're making a trade. And you continue to go, I continue to trade some measure of profit now so that I can have infinite amount of profit at some undefined point in time in the infinite future. Well, as human beings, we are finite beings in this form, right? Our bodies currently are finite. They will stop working at some point, and whatever is infinite in us will not be here and now anymore. So, sure, there are things to invest in that are worth considering over the infinite span of time. Is money at the disposal of your body at this moment, in the span at which you are alive, right? Is that something that you necessarily need to have an infinite value on? Number one. Number two, is GameStop infinitely valuable in an infinite span of time? And I would argue reasonably, no. It has value. It has, based on what it has shown, its value in the future is likely to be greater than what its value is now, based on what it looks like it's going to be able to pull off. But does it have infinite value that can be quantified by dollars in a way like that can be delivered in a way that's not going to leave people who are making that trade over and over and over again frustrated? Because that's the problem with people who make that trade over and over and over again like that, is they don't realize that's the trade they're making. Because really what they're saying is, I want infinite value in a finite period of time, right? Because there are the people who go like, oh, this play 5 years. I think on like the GME subreddit, not Super Stonk, but the GME subreddit, there was like somebody who made a post that was like, I can wait 5 more years if I have to, and this person just got slammed for saying this, and it was like, wait, so these are the same people who say like, don't do options, don't sell calls, don't do whatever. It's like, yeah, it's bearish in a certain point, but like if you're selling $30 calls, like, are you really that bearish? Is that really that bearish? That's not that bearish. And maybe you're not doing it on your whole position. And part of the idea is like selling calls with, like me selling calls within my thesis. Somebody else said this. Maybe Rob said this. I don't sell calls because I'm trying to go, transition my position from GameStop into something else. I sell calls so I can take money so I can buy more GameStop. Because this is a way, it's like, yes, I'm sort of betting against myself. I'm trying to measure my risk, but like what I do with the premium that I get from, especially this summer, like all this premium that I extracted, I should say, from Cover call trades just went straight into GameStop shares. So it's a bullish bet that enables a bearish bet that enables me to continue to fund further a bullish bet because, right, I wouldn't even be making this trade. Like, this trade wouldn't be possible. I wouldn't be able to sell covered calls if I wasn't bullish on the stock at some point, right? If I didn't believe in the underlying investment, why would I? And I thought the bottom was just going to fall out of this thing. Why are you in this trade selling covered calls? If the bottom is going to fall out on you, right? But if you don't think the bottom is going to fall out on you, then you believe in the underlying stock enough to hang in the trade so that you can sell cover calls, which are above where the price is. And that's the thing, as I always say, my strategy is to target the call wall. I do not sell calls. I do not sell cover calls below the highest position of net call gamma exposure to the options market maker, which tells me, right, that's a specific trade because that says to me, the options market maker has a vested interest in keeping the price below that mark for as long a time as possible, because that will aid the market maker's profitability strategy. That mark is usually above wherever our price is. So whenever I sell that call, I'm still selling it with the expectation that the price will go up. I don't sell I'm not selling $20 calls being like, oh, this is dog shit, we're going down. I don't do that. So it's important to think about, like, define it. And this is, I'm not saying you, Simple Rick. I'm not saying you're saying this, but this is something that I would say to somebody like, right, who might bring up those types of arguments out there, right? This is another good point. Blessed beyond measure. So there are some things you could do. You could try to just kind of swing trade it with the expectation of a bond offering. You could swing trade a portion of it. You could also do something like, well, so if I remember correctly, I think what Richard's trade was, I was a bit more conservative, but Richard was a bit more aggressive, and he called it correctly. He sold 2027 in the money covered call leaps, which was right. Like, whoa, great trade. He was feeling very confident in the likelihood of an offering based on Ryan Cohen's comments around the Bitcoin conference. I was also confident of an offering, but I was a little bit more of a scaredy cat, so I went 30s. Actually, I went 35s, and then I went 30s, and sort of just stayed in that kind of range, and then walked them out, and walked them in, and then did a bunch of different things, but stayed out of the money. Whereas Richard, I think, understood correctly that, oh no, they were going to walk this thing under 25. So by selling a 25 leap, even if he missed, like, based on all the work that he's done with the swap theory and all the work that he's done with the internalization and settlement and stuff, he's like, at some point, right, the fundamental, the 2x cash value, like if you're going the most conservative valuation of the company, still down around like $21.50, $22. This was back when. What are the odds that in one of these swap cycles they're not going to move it down below 25 or closer to 25? And there's going to be an offering. So, like, if you sell those December 2027 $25 covered calls when the stock price is 34, you're already way up, right? And he just ended up being way, way up with that. So that's something you can do too. And then if you miss, like, whatever, you still have your money. You get your money up front and you don't have to pay tax on it. You can just sit on those leaps for 2 years if you want. Worth thinking about. So here's a good question. Yeah, so like what I guess I don't know. I think we at this moment, my thought is there's going to be an EPS beat, which would mean gap up day after earnings. Cohen's been pretty good about waiting at least one day to announce an offering. Um, so if we get that again, if we get an EPS beat and comments from the company, um, if he doesn't come out and say we're not going to do an offering, then I think we get a day to let the gap up happen, and at the hot try to look for a high point on the day, try to look for some sort of key spot in the landscape for what the pricing might be, if it's 27, if it's 28, 28.50, whatever. And then once we see there's going to be a ton of volatility that's going to come in, you may do a first round, right? So you may do a first round of something shorter term. It's tough, right? It's tough. A lot of the time, what I've done, so like even what I did going into quarter 3 earnings last year, even though they were good, even though we traded up, is I still opened cover calls. I think I opened like 30 weeklies. Those still died that week, even though we went up. Those still worked. So, I mean, maybe we'll think about this when we get a little bit closer. For me, it's a little too early for me to plan at this moment exactly what I'm going to do. I'm still kind of focused on, I may have stuff that's set for, I have stuff I'm trading at expiries that are out in September, but I mean, these are trades that I'm like going to close in the next week or something like that. So we will revisit this. Oh yeah, we love the floor. We love the floor. It's great. It's great. No, it's a really amazing opportunity. Oh, we have a lot of comments. Be nice, everyone. Hey, Kurt's here. Prayer pack sold out. It means that all of the vault cards that GameStop has, they've already sold them. They sold them all. They've all been bought. All the power packs have been bought. I think there was like 10,000 of them, and don't they go for like 25 or $50? So average 37.50. So they just picked up like close to 400K in revenue on those. That's not bad. Ooh, interesting. How does that work though? I don't understand how that works. So it's not a rule that you do the announcements after hours or pre-market. That's just what Cohen's chosen to do. And it's actually like that's the thing. He's actually behaved really predictably with this stuff for shareholders. He's been really clear about this. It's just like it can still if you're not if you don't know to if you're not watching him really really closely, it can be you don't necessarily know that that's what he's saying, right? Because he can't just come out and say, "Hey, everybody, we're going to do an offering in this day," right? Because then that spills the beans, and then right, he communicates it. he could be random about it, right? He could be less methodical about it, but he's not. Which I think is a nod toward, like, they can view this stuff. I mean, do I think Ryan Cohen is watching the stream right now? No, I don't. But like, there are enough folks out here who are talking about this in it, like not just us, not just Richard, right? But that know how this works, right? That he understands. He's like, you know what? He has millions of shareholders. He can, he can put stuff out. What he can do is he can stick to his gun. What he's always done. He can stick to his guns. He can be regular, and by giving this kind of regularity, those who know can take advantage. Those who recognize the sort of character and comportment that he has can anticipate that and be able to apply that to their favor. Hey, never more than 12. What's up, man? Thank you so much. Yeah, for sure. You're going to like the beginning. It was fun. You're going to like the beginning, man. Thank you so much. Hey, congrats, Ribleep. Cool. I hope it works out for you. Hey, Mr. Bogsham. Welcome to the first live stream, my friend. I know you've been watching it for a while, but it's great to have you with us. That's a cool name. Let's see. 6 weeks ago, went on GameStop website, found the most expensive Pokemon card I could buy. Oh, all right. Well, wait till we get that liquidity coming in. Give it a little time. Give it a little time. Wouldn't we all, Rableep? Wouldn't we all? That's right. I don't think I was doing. Yeah, I wasn't closing a penny. Try to stick in like 3 cents. I got a couple filled at like 6 cent spread, but mostly 5. Unless they changed, unless you're talking about like what the fees are. I'm pretty sure it's 0.65. 0.65 for a leg, though. Again, unless that's changed for certain traders. I can check my fees. If we do. That's not going to give me a breakdown there. In any case, very eventful week. Hey, cheers, my friend. Thank you, Day Swag. I appreciate all you guys. I appreciate you guys hanging out after market close, starting your weekend out with me. I really hope this information is helpful. I just I hope that the stuff I learned here can be put to good use by you guys, by anybody who wants to take this and do good with it, for the world, for your families, for things like that. Maybe one day all of this, if we all wizen up to this, it'll mean that the game will have to be a bit fairer and maybe played the way it's supposed to be. But in any case, for the meantime, just enthusiastic about GameStop. Very happy to, have the support of all you guys out there. And yeah, look forward to seeing you guys next week. Have a great weekend. Thanks as always for watching and listening. And yeah, we'll see how this bid ask spread stuff holds up into next week. So thanks a lot, you guys. We'll see you. We'll see you next week. Take care, everybody. Have a great weekend.